As traders, we have to admit when we're wrong. There's no room for ego here. Before you even enter the trade, you've got to know what you're expecting to happen and what you don't want to see happen, and then you have to adjust. I had a curveball thrown at me this week. I was not expecting the big market sell off. Well, we got one. Now what? I'm going to go through that process in just a little bit, but before I do that, this is your chance to help other traders. I know you're here because you're trying to learn. If this content is helping you, please share this video with other traders. Help me grow the YouTube channel and reach lots of other traders. Like the video, and by all means, please post your comments. Should I be following the devil on one shoulder or the angel on the other shoulder right now? Let me know where you stand as far as the market right now. I'd love to see your comments. So what happened this week? Well, I'm going to get into a little bit more of it during my market analysis, but as you know, I've been looking for a nice gradual grind higher into year end. Typically, it's a low volume float higher. We had the dip that we were looking for a week ago in the video. I had mentioned to you Sunday, hey, Monday, I think we're going to open higher. I like that bullish hammer that we got on Friday. Well, the market opened a lot higher on Monday and we were off to the races. But that quickly soured Wednesday and Thursday. And now all of a sudden, we had some pretty heavy, dang selling pressure. Uh-oh, what happened to the positions? Well, we're going to do a complete review of the positions, but before I get to that, you need to have an idea of how you're going to be adjusting and what your actual strategy was and what was your mindset going into the year end right now. For me, I was looking to sell out of the money bullish put spreads, and I was looking to sell naked out of the money puts on really strong stocks. I suspected that we could have some market volatility. So it's very important that the market drives all of your trading decisions. That's what dictates what kind of strategy you're going to be using. Are you going to be more neutral? Are you going to be bullish? Well, if you're bullish, are you going to be a little bit more passive or are you going to be more aggressive? Those are all things that go into your trade plan. And so right now we've been using a bullish strategy, but a relatively passive one. We're trying to generate some income and take advantage of high implied volatilities in one case and time decay in another. That plan was still valid, but it didn't mean that my positions didn't take some heat and didn't move against me. We got the dip that we were looking for. We got the bounce that we were looking for. At the beginning of the week, we started to enter some new positions. And then all of a sudden, wham, the door got slammed in our face. So we're going to take a look at that market action. This is something that every trader goes through. This is not unique to me. So I think that this experience is going to help you understand how I adjusted and also what my game plan is going into year end, because I've got new information now. And when you get stuck like this, you get trapped, you work your way out of it. And if you come out of it relatively unscathed, it is the best possible feeling because now you have new information that you didn't have before. And there's a new market tell that's going to help you set up even better trades in the future. And that's the juncture that we're at right now. Let's take a look at some of the recent picks that we had. J&J is one that I had 3 weeks ago. I've been updating you on this one. Right in here, I like the fact that the stock was able to tread water after the earnings announcement. And I had mentioned to you, this is kind of a flight to safety trade. Now, this was before the FOMC statement. This is before the major earnings announcements. This was when I really had a difficult time finding a pick. And I had mentioned all this in that video. So go back 3 weeks, take a look at the video, and you'll get the backdrop for what was happening. Well, the stock pulled back. That's not great. These were the November call debit spread. We bought the 190 calls. We sold the 195 calls. We did that for a debit of $3. And you can see that the stock is currently at 196. It was this week. We're looking to sell this debit spread for $3.60. You could have gotten much better than that. That's a 20% return. So Very nice stock, and you can see how it rebounded very quickly. And that happened during a market sell-off. This is your market sell-off in the right panel here. So J&J, nice stuff. So we also had APLD. That's kind of been one of the dogs. So APLD is a AI stock. It had really high option implied volatilities, and that came out right about in here. Other AI stocks had already been hit, but this one had held up relatively well. So I suspected that it would continue to hold up pretty well. A little bit more dangerous play, but I still liked it. I still think it's okay. So what did we do? We went all the way down below the $30 price point right in here, and we sold the $29 puts for $1.50. So that was right in here. Our net cost would be somewhere around $27.50. We still haven't been assigned on this, by the way. We still have a week to go. And you can see how the stock fell along with all the other AI stocks. Boy, they got hit hard this week. The stock did bounce nicely off the 100-day moving average, and it's somewhere around the $23.50 level. Our price is $27.50. What would I do with this trade? Well, I would see if the market has a bit of a rebound next week. You haven't been assigned yet, so you don't really have to do anything with it. There's a chance that you may not get assigned. There were a lot of stocks this week where I had bullish put spreads and naked puts, and the stocks rallied and they finished out of the money. So you don't have to do anything. This stock is going to carry a lot of option implied volatility, so your odds of getting assigned on it, even in the money, are pretty small, even Thursday. So maybe you get to Friday without being assigned, but if you are assigned the stock, no problem. That might actually work to your benefit because you'll be able to immediately sell some calls against it. And so if our net price is somewhere around the $27.50 level, if you sold the $27 calls, you could get about $2 for them right now. With a little bit higher move in the stock, you might be able to get $2.50 for them. Well, now all of a sudden, your cost basis for the stock is all the way down to $25. And you could still make $2 on the trade. High option implied volatilities, okay? There is a reason that we picked this stock and those option implied volatilities. BE was another one that I showed you during that same video. I'd mentioned to you, if you wanted to play it really safe, you could go further out of the money. In that instance, you would be selling the $90 put all the way down here for $1.80. And that was the November 21st expiration. You would have been able to generate a 5% return. Whoopsie. Looks like you didn't do too good on that one, did you, Pete? No, actually, those options, those $90 puts that expire next Friday, they're trading $1.45 by $1.60. Yeah, at $1.90, you're making money on it. Would you need to keep it open? Should you close it down? That's your choice. I like BE. It's a strong stock. It bounced very nicely on Friday. I think it could continue to rebound, so those put options would expire worthless, but it's up to your risk tolerance. As I mentioned to you earlier, we have new information. We have information that sellers were able to move price. We had a pretty substantial drop in here. Not expected. Time to adjust your risk. Classic example. So you've got money in the trade, buy it back, go to the sidelines, evaluate what happens into year end. That's certainly one possibility for you as a trader. That's a decision that you're going to have to make, how you want to handle this. WDC. That was one that I gave you last Sunday. Loved the stock. This was where the video was recorded. This was the price action on Monday. Woof! Took off without us. Dang. Another one of those. It seems like we've had a lot of those, right? It's like, we're bullish. We want to take a position in this stock. We liked where it closed Friday. If we can get these prices Monday morning, we're all set. We'll do the trade. And then whoosh, the stock takes off out of nowhere. We haven't been able to get the trade done. But those stocks have still been really good. AVGO a few weeks ago is a classic example. If we'd have been able to get that spread off, even with all this market selling, it's in great shape. Well, what about WDC? I had mentioned to you, let's go closer to the money on this one. Let's not go all the way down here. We could certainly do that. And I showed you those premiums. I said, all right, we're going into year end, and I think that the market's going to rally on Monday. Let's go closer to the money. Let's get a little bit more premium. Let's sell those 150 puts. At the time, I had mentioned they were $3.60 bid, $3.60 bid, offered at $4. Market takes off. Okay, no, I can't get the trade done. I can't get the trade done. Oh, here it comes. Now I can get the trade done on Thursday. Think about this. After the bloodbath 100-point S&P sell-off, are you telling me that you're going to want to sell naked puts in that type of sell-off? You shouldn't do that. We were wanting to get the trade off here. We were expecting the market to continue to go higher. Well, it did initially, but then when it started to pull back, the stock was pretty stubborn. But when we see this waterfall event, hell no, you should not be selling them. But I'll tell you this, that if you did sell those options for $3.50, $4 was what I suggested in the video last weekend, they closed lower than that price today. I think they closed 330 by 345, winning trade. So you can see how these trades are configured to put the odds in your favor, and we're only picking the strongest stocks. Stick around. Got a really nice stock today. I think it's going to perform really well. What did we have in terms of economic news last week? Really wasn't a lot of economic news. We had the really nice rally on Monday. The government ended its shutdown. That was the really big news this week. Earnings, Cisco. There was some news that BlackRock has had some more write-downs, so private equity is soft right now. It's not a real liquid market, but it is starting to impact the overall market because these little credit issues are smoldering and they're starting to pop up. To quote Jamie Dimon, where there's one cockroach, there's usually more. Well, that's what we're starting to see is there are some credit issues. And the Fed's overnight repo facility has been visited with greater frequency. We still don't have a whole lot of information here. We don't know what's going on as far as the economic data points. I'm not sure which releases we're going to get this week. I don't know if initial jobless claims is going to come out. I don't even know how accurate those numbers could possibly be. The BLS, Bureau of Labor Statistics, is talking that they may never release the October employment numbers, which were deteriorating at the time. The government shutdown, that's not going to help any. Analysts are talking about the government shutdown that lasted over 40 days as having a 1.5% negative impact on GDP. So whatever the number was going to be for Q4, it's going to be 1.5% lower because of the government shutdown. We got the government open. That was good news. When the government opened on Thursday morning, you would think, and Wednesday we kind of knew that the government was going to open, that the Senate had the votes that they needed. So this is a nice little rally before the actual vote. And then what happened once the vote went through? Oh boy, was that a sell the news event. Sold the market off hard, closed on its low. Friday, we gapped way down below the 50-day moving average, and then we climbed our way back. So we're going to take a look at that price action in just a second. That's kind of the news that hit last week. So we've got some credit issues starting to pop up, possible write-downs that some of these banks are taking. That's not a really good backdrop. There's lots of nervous jitters. We had all the AI stocks got pummeled. They got hit hard. Crypto, they got hit hard. Anything that had been in rally mode for a while and that had gotten pretty hot, all those stocks got their wings clipped this week. What do we got coming up next week? Again, we don't know what the economic releases are going to be. Maybe we get some, maybe we don't. We do have the FOMC minutes. Those will be published. So we'll get to see exactly where the Fed officials stood in terms of those who want to cut rates in December and those who may not want to. I think the Fed is going to cut, and a rate cut is priced in right now. So with all this uncertainty, not knowing what the economic data points actually are, I think they're going to err on the side of caution. When we do get a jobs report, if we get that jobs report the first Friday in December, boy, that could be an ugly one. I don't even know if it's going to be accurate. I think everybody will be suspicious of it in the first place. I don't know that we've had any accurate jobs numbers the whole dang year, to be quite honest with you. I think the job scene has been a lot weaker than has been reported. May not be in the headline number that we've seen, but the household survey has actually painted a much weaker picture. And I believe that household survey has actually been more accurate. We do have some earnings coming out. The big one is NVIDIA. Well, if you're talking about AI stocks driving the market, there's no bigger stock than NVIDIA. Let's see how many chips they sell. And we've got some of the retailers posting results as well. Home Depot, Target, Walmart. So those are some of the companies that are going to be reporting. I suspect that retail sales are going to be a little soft, at least from what I'm seeing in consumer sentiment. I don't think that holiday spending is going to be robust. I certainly don't think that the government shutdown the last month of the quarter is going to help their numbers at all. We'll see how that comes out. The market will be reacting to it. So let's take a look at the price action on Friday, because I want to talk about what happened and what we can expect next week, and what does this price action actually tell us. So fundamentals are fundamentals. We trade what we see, not what we think, and not what we hear. By the way, classic example, Michael Burry, guy that called the housing crash back in 2008, made a ton of money during the housing crash. He's been buying puts on Plantair and NVIDIA, and he's been doing it in size. Well, he was trading based on fundamentals and valuation. Well, his hedge fund just closed down. Oops, because he traded what he thought and not what he saw. He was early. He could be right. We don't know. He could be right. Yeah, so those stocks highly valued? Absolutely. Trade what you see, not what you think. And when I take a look at the market technically, we had this little pullback here. Everything in here is fine, okay? We had this big drop right here. Well, that was a Trump, I hate China, we're going to impose 100% tariffs on China. Okay, we got another one of those, and then we gradually grind back. And then in here, we got this little lift off. This is always just a horrible type of move. Gaps up on light volume, those are easily erased. And this was before earnings announcements, and this was before the Fed. So in here, we are in wait and see mode. This is kind of when I put that J&J trade on, looking for some kind of safe play to put on, because I didn't know what the reaction was going to be. In terms of selling bullish put spreads and naked puts, no, we weren't active then because we needed to see what would happen. And as soon as that news came out, we saw this pullback. So it wasn't until in here that we started selling some of these naked puts. Okay, so I expected a pullback. Everything was fine. We had this nice bullish hammer off the 50-day moving average. We got through AVWAP-Q. This is the Friday before I did the video last Sunday. All systems go. We got the pullback we were looking for. We got the test of the 50-day. We got the nice bullish hammer. Yeah, this is going to be a great week. Let's sell some WDC puts. So the market rallies up nicely. Everything's going according to plan. And then the door got slammed in our face. And this is where you had to start adjusting your position. So there are one of two mentalities that you could be in. Okay, one is, yeah, I really don't want to own these stocks. I said I wanted to own them when I sold those puts, but I really don't want to own them after they've fallen apart that much. You can buy your positions back in for a loss on the notion that the market is going to come in and I'll have an opportunity to buy them cheaper. But that is a decision that you make before you put the trade on. Not once it's gone against you, before you put the trade on. The other mentality is, hey, I'm going to buy the dang stock. That was my game plan in the first place. Bull markets die hard. I have seasonal strength working in my favor. I'll weather the storm. I know that at minimum, after a big rally like this, if there is a sell-off that's deeper than I expected, I'm still going to get a bounce that gets pretty close to the all-time high, could even go up to the all-time high. I know I'm going to get that bounce, and at minimum, I'll get a lower high double top. I will weather that extra pain on the downside here knowing that I'll have a chance to exit better. So those are the types of adjustments, and that's the mentality that you need to be in. By the way, I recorded an educational video last week on trade confirmation, how we use confirmation for entry, how we use confirmation to enter additional positions, to add, to scale. Please make sure to watch that video. It's a really good one. I think it's going to help you out. What I learned Thursday was that buyers are not as strong as I thought they were. Typically, we're going to get this kind of light volume move higher into year end. That's going to be a seller's boycott. A small amount of volume can drive the market higher. Asset managers want to mark their portfolios up into year end. That's typically what we see. When you get a long red candle like that, whoa, it puts you back on your heels. And now you're adjusting your risk and you're trying to adapt and change your game plan and understand there's new information that's been made available to me. Now, how am I going to adjust my future trading? For me personally, I'm less bullish. Am I bearish? I can't get bearish into year end unless we hit that 100-day moving average. And I really don't see that happening. So if next week the market struggles to get back to this high here, then I'm going to be definitely turning more into the bearish camp. And if this trend line, this downward sloping trend line holds, then that's going to be resistance. So what am I looking for this week? Well, I'd like to see the bottom of this long red candle hold Monday, Tuesday, just kind of try and recover half of this candle would be good. The longer we can hold the gains from Friday right here, the more we can creep into this red candle, the more emboldened buyers will be. They'll sense that, yes, there is support. Now we've tested this level not once, but twice recently. I can feel pretty good buying here into year end. That's what I'll be looking for. And if we start creeping into this red candle, that's going to be consistent. That's going to give me the confirmation that I need. If we get above the red candle, that's the open of the red candle. That's additional confirmation. These long red candles serve as landmarks. I want to get above the open of that. The sooner we do it, the more bullish I am. And then obviously this downward sloping trend line and that horizontal resistance right there. If you can get above that, we'll probably make a run at maybe 690, the all-time high. We could even drift up to 700. That's how everything plays out technically. I'm going to be watching the price action the next few days. So just to recap, I'm looking to start edging into this long red candle and creeping into it, because then we'll have two signs of support here. I do not want to see another long red candle. I absolutely, positively do not want to see this long green candle erased and be back below that 50-day moving average in the next day, 2 days, 3 days. That would be bearish. Overall, what does this tell me? It tells me that we're not getting the year-end rally that I would normally like to see, and that we could have some issues going into next year. That selling pressure could really start to build. So I'm definitely less bullish than I was. I'm barely bullish. I'm pretty close to neutral right now. That's kind of how things are shaping up for next week. Let's take a look at some stock searches. And by the way, take my 2-week free trial. Won't cost you a dime. I don't even take your credit card information. You can come into the chat room. You can see what we're trading. I made 100 S&P points Friday. Basis one contract. I trade more than one contract, by the way. It's incredible. I had a 40-point winner before the market opened, and then right on the open, and then I had a 60-point winner during the day. You can also check out the software that I'm using, Option Stalker Pro. It's incredible. It's got really good searches. Right now, let's go in and let's conduct a search. I've got a custom search that I'm going to show you, and this is the criteria that I used. Show me a stock that's recently reported earnings in the last 10 days. Show me a stock that's above AVWAP-E. So AVWAP-E is the average volume weighted price since that earnings announcement. So it's recently announced. We've had market sell-off, and the stock is still above that average weighted volume price. Okay, well, they like it. That's a good thing. Option volume, or excuse me, option liquidity, value of -1, that's going to be very liquid. We're going to have decent option liquidity. Show me a stock that has D1 relative strength. So even with all this market selling this week, even with all the selling that we've seen over the course of the last 2 weeks, this stock is strong relative to the market. All right. Well, what do I got? I got a whole bunch of really good looking stocks in here, but I'm going to pick letter B. I like this one. I like it a lot. So I would trade this stock. You can buy call options if you want. Stock doesn't make big moves. Here's why I like it. I like the fact that it really had some nice strength in here. Look at that. That tells me that institutions are really liking what this company's doing. Got a little bit ahead of itself, compressed for about 2 months. Earnings came out. Oh, they like the number. Look at that gap up. And so what did the stock do this week? When the market sold off, it held those gains. If they were going to smack this thing silly, they would have done it Wednesday, Thursday, or Friday. And look what it did on Thursday. This is the tell for me right here. Do you see how well that stock held up? Let's just take a look at what the market did the last 2 days. Look at that flippin' drop. That was some huge selling. And look at what happened Friday morning. And we got that really nice move up in here. And I had mentioned to everyone in the chat room, I said, there are 1 of 2 scenarios are going to play out on Friday. We've got to wait to see which one we get. We're either going to get a nice drop on the open with a big bounce and go into the gap. If we get that, we're going to grind back all day. Well, we got that right out of the gate. This is when I entered the S&P position in here, had my 1OP indicator giving me a really nice signal right in there, and I took gains right up in here. But the selling pressure that we had seen on Thursday could have continued Friday morning. And in that scenario, we would have seen a down open and just a very little drip lower the entire day, just gradual selling pressure. That would have been pretty daunting. That would not have been good because no bounce to VWAP would have been a sign that sellers are exiting. They're in risk off mode. So I'm glad that we didn't get that type of pattern. That's certainly something that we were watching for. So for right now, the market's bounced. Everything looks okay. It doesn't look great, so we're going to tread cautiously. And if you take a look at what BE did during that same time, this is the price action on Thursday and Friday. So again, mind you, the market's down hard. This stock is holding its own for almost the entire day. And then it gets this little crackdown right in here. It doesn't cave in until the very end of the day. It had a little bit of selling pressure late in the day. Here's what I really like. Here's what's got me fired up about this stock. Oh, yeah. Look at that volume come in late in the day on Friday. Somebody's buying it. Somebody likes it. How would I trade it? Again, the market drives all of our decisions. On Monday, I want to see the market open into the red candle. I don't want to see a long red candle. I don't want to hear that China was down or some crazy crap like that, and we've got the S&P futures down 50 points. I'm not going to be buying into that. I've already had my warning shot this week. I'm going to take it easy, okay? I want to make sure that I have a market that's starting to rebound off of 2 tests of the 50-day moving average. I want to know that buyers are feeling pretty good about this retest and that we've got a chance to go higher. That's what I need. That is the underlying premise for any bullish trade from this point forward. Then I want to chew into that red candle because I want buyers to feel better and better. We get to the halfway point. That is the first point that I'd like to reach by, say, Wednesday. Then by the end of the week, I'd like to be testing the top of that red candle. I'd like to get through it. If I do that, then I know that this retest was successful. Buyers are feeling pretty good, and the year-end rally is kind of back on track. That's all I'm looking for. I'm trying to keep my risk very low. I'm trying to stick with the strongest possible stocks. B is one that I think will do well. What would I like to see it do? Well, I'd like to see it get above this high right here. So yes, I'd like to see it start challenging that when the market is strong and the market's moving higher. I want this stock to make a new high. That would be confirmation. If you watch my video from earlier, you'll see that a red candle that is instantly erased is confirmation. That would be your signal to buy that stock. You can hold it for a short amount of time and day trade it, or you can hang on to it for a longer period of time. If you enter well, then you'll get immediate price movement in your favor, and you'll be able to put your stop where your entry point was. 0 downside, unlimited upside. Love that type of setup. Thanks so much for watching the video. Please give it a thumbs up. Please take the free trial. Leave some comments. Let me know if you think I should be listening to the devil in me or the angel in me. Which way do you think the market's going to go? Trade well. We'll see you soon. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.